Bitcoin boom may be fleeting. Former OMB director David Stockman, who served under President Reagan, has a warning for cryptocurrency investors. He joins us live on the phone. David, welcome to you. I want to know, what are you so worried about when it comes to this Bitcoin craze?
Well, I think South Korea regulators overnight were correct. It's irrational, overheated market like never before. I mean, Bitcoin is not an alternative anything. It's not alternative money. It's not an alternative asset class or even a proven payments technology. It's just the same old speculative mania reached some kind of, high point. It's part and parcel, in my view, of the tissue of speculative mania that we have in all our markets. When we have, Amazon, a great company, but still trading at 280 times earnings, ridiculous. The stock market, S&P 500, small bounce back, but earnings are no higher than they were 3 years ago, trading at 25 times, doesn't make sense. The Russell 2000, trading at 110 times trailing earnings, doesn't make any sense at all. So this is just part and parcel of a speculative mania that's reaching some kind of top, and I think the year ahead is going to look a lot different as a result of that than the year behind, mainly because we're going to have a fiscal crisis. Everybody is talking about how wonderful this tax bill is. They've forgotten to notice that it's all front-loaded and that in year one, fiscal 2019 starts next October 1, they're going to borrow $280 billion to essentially give money to the middle class and corporations, on top of the $700 billion that's already there, and the extra $200 billion that Congress, Republicans, and Trump are spending for defense and disaster relief and all the rest of it. Now, the reason this is important is the Fed has told you we're on automatic pilot. Come next October, when the fiscal year starts, we're going to be selling $600 billion of bonds at an annual rate, nothing like this in the last 30 years.
Right.
And Uncle Sam is going to be borrowing $1.2 trillion to fund all the things I just mentioned. So if you do some simple math, that is one arm of the government selling 600, the other arm selling 1.2 trillion. Who is going to buy the 1.8 trillion of debt flushing out into the market next year at anything like the current yields?
David, it's a good point. I want to just get back to Bitcoin because you made some fascinating points there. It is many times regarded as a speculative asset, but it's hard to dismiss the market cap now. It's gained $220 billion in market value here in 2017. So is there anything that regulators can do to make you feel more comfortable about investing in Bitcoin?
No, I don't think regulators should do anything about it at all. It will take care of itself. It will burn out in a spectacular crash. All of these latter-day speculators will have their hands burned to a crisp, and they will learn the proper lesson. What we really need to do is not think these are regulatory problems, but understand they're monetary problems. The Fed, other central banks have flooded so much liquidity into the system and have created a speculative environment that has lasted so long that people actually believe you can make 50 times your money in 2 years, and that's all in a good day's work. That's nonsense. That's dangerous. That's crazy. And yet, day to day, people get so caught up in this, and only because it's not just Bitcoin, it's the entire spectrum of assets, risk assets in the market, that no one can see reality, common sense, or the freight train that's coming down the road. You should be really worried to death about a fiscal situation where the Republicans are spending like crazy, cutting taxes like crazy.
But David,
and
if it was that risky, why are large trading operators, not just Coinbase, but the CME, the CBOE, the NASDAQ, expected to launch their own Bitcoin futures contract in 2018? Why are these large, established, highly respected firms joining in on the crypto mania if it is that risky?
Well, because anytime Wall Street sees an opportunity to shear the sheep And when they see the sheep stampeding to the slaughter, they line up with some new gimmick to take advantage of the circumstance. That's all. There is nothing that's being validated by the opening up of a futures market. It's just everybody trying to get on the train for the ride.
Yeah, that seems to be the case. It's trading at 13,800 right now. David, where do you see Bitcoin trading 1 year from now? How far could it fall?
I have no idea. I mean, it could double or triple from here, or it could fall to zero. But the point is, it's not real money, because real money for transactions has to be stable. No one could run a business, fund their working capital, let's say, on a Bitcoin account. It's not a real asset class. It's basically a class of, really stupid speculators who have convinced themselves that, trees grow to the sky.
Anthony, you have a question.
Yeah, David, we look back about 8 years ago, and we see what happened here. The Fed had to lower interest rates to goose the market, so that killed savers. So savers were forced to be investors, and the investors came in and they inflated this bubble, as you said. But now what happens when you start raising interest rates? Now the savers can save, but now that puts a kibosh on the rally. So this is a really bad catch-22. And as an investor, what are you supposed to do?
Well, I think first you have to recognize the catch-22. You've stated it perfectly. I rarely hear it stated, day to day in the interviews with market participants. But the better part of wisdom right now is to recognize the catch-22. Believe the Fed. They're not lying to you. They say we're in an epochal pivot to quantitative tightening, not easing. We've never had this before, and they're doing it at a time, and let's not forget business cycles haven't been abolished, at a time 100 months into this expansion, late in the cycle, when the fiscal situation, which is supposed to be stabilizing or heading towards balance, is exploding to the post $1 trillion a year level. This is a collision that has never been seen in the history books, and there's going to be a lot of furniture broken when you try to finance the markets in that environment.
Jim has a question.
David, you talked about the speculative world we live in. Let's say the whole cryptocurrency world is about 400 billion market cap. Since the time we talked, that could go to 300 billion or 500 million with the way it moves around. At this level, if this implodes, if Bitcoin goes to zero, whether it be for regulatory issues or a massive hack that shakes confidence, is it a big enough market cap there that it could drag other things that are just minor bubbles like the stock market or housing with it?
Well, I certainly think all of this is interactive. There is so much leverage in the system, overt and hidden, that once the leading class of speculation begins to roll over and people are forced to sell, it will create a cascading dynamic. It always does. So you could say, well, there's 400 billion in Bitcoin overvalued. Maybe it's worth nothing. There is 700 billion of market cap in Amazon. Half of that could disappear just as easily. So the point is, there are pockets, giant pockets of bottled air everywhere that I think are at risk, and they don't exist in a vacuum. They're not in separate silos. It's all part of one speculative environment.
David, thank you so much for joining us today. We're going to